Hello, everyone. I'm Brittany Aubain, filling in for Kip and Aline, and today is Tuesday, April 4th. You are now watching Open, a program that brings the Bronx and New York City straight to you. Don't forget to stay connected with us via social media at BronxNet TV. On March 10th, 2023, the Silicon Valley Bank crashed, making the second largest bank failure in the United States history and the largest failure since the 2007-2008 fiscal crisis. Now, many are worried that this failure could prevent the Feds from focusing in on inflation issues, and if this failure has the potential to cause a recession this year. Joining me now to discuss all the details and what you may need to know about the Silicon Valley Bank crash is Jacob Channel, a senior economics for Lending Tree. Jacob, thank you for joining me.
Thanks for having me.
So, just to start off, can you tell us a little bit about what led to the collapse of the Silicon Valley Bank?
Yeah, so I guess in the simplest possible terms, I guess you could just say that they ran out of money. So generally speaking, banks don't keep all of the deposits that are made within them in cash. More often than not, they invest some of that money into other things. And so as a result, if everyone decides to withdraw their money at the same time from a bank, that can lead to really bad problems. Well, lo and behold, that's pretty much what happened with SVB. They had a lot of investments that weren't really panning out very well for a variety of reasons. They made an announcement that they were short on liquidity. In other words, they were short on cash. And this caused something called a run on the bank, which, if you paid attention in, let's say, eighth grade history class, you might recognize that term from the Great Depression. And basically what happened was not everyone, but a lot of people who had their money deposited in that bank went to that bank and said, give me all my money back. The bank said, well, we can't do that because we don't have this money. And then, as we know, the bank collapsed. The government stepped in and said, enough is enough. We're going to take over and ensure everyone eventually, in some way or another, gets their money back. So like I said, it's a little bit complicated, but in a nutshell, what happened was they just ran out of money.
Mm-hmm. Right. So, what does it mean when a bank with billions of dollars in assets crashes?
So it can really depend. In this case, I think the good news is the larger ramifications of it are pretty isolated. So in the short term, it caused a lot of uncertainty in the economy, caused things like mortgage rates to decrease. However, it doesn't seem like there's going to be some big catastrophic thing that SVB's collapse will bring about. Ultimately, what really is going to happen probably is, or what already has happened, at least in the short term, is the government has come in. They've said, okay, we're going to liquidate SVB's assets and ensure that everyone who had money deposited here gets their money back. SVB was recently sold to another bank, which now owns it. So at least in this case, it doesn't seem like there's going to be a huge deal outside of the initial shock and panic that maybe it caused, which is nice. But certainly there can be some worst case scenarios or scenarios that are worse than this one, where large-scale bank collapses can have much more serious ramifications for the broader economy.
Absolutely. And this is considered the biggest bank failure in the United States since the Great Recession back in 2008. Can you briefly remind viewers about the '08 recession and how this bank failure compares?
Sure. So back in 2007, 2008, you had a very different economic environment. Basically, what ended up happening was a lot of people were defaulting on their mortgages, and this had this ripple effect that ended up causing kind of the entire global economy to eventually sort of tank. And so you had a series of bank collapses. It got so bad that the federal government, Congress, had to get involved and pass a big bailout to ensure that more banks didn't collapse. So compared to that with what is happening here, you can see that what's happening here, despite the fact that we talk about this big number, that $200 billion in assets that SVB had, sounds scary, but in comparison, it's not nearly as bad as it was in, say, 2007, 2008. So again, that goes to show that, well, bank collapses can have very, very serious ramifications for the broader economy. That doesn't mean that they always will. And fortunately, it seems like we're in a scenario right now where this collapse is definitely far from ideal, but also not completely catastrophic.
Right. And these circumstances are often linked together. Like you just mentioned, some of them have serious ramifications, some of them don't. But these circumstances are often linked together. And so are bank failures causing the recessions, or is it the other way around?
So it can be both. There can be scenarios wherein there is a bad enough bank crash, a series of bank crashes that ends up pulling the entire economy down with them, causing recession. There can also be instances where there's a bad enough recession, as well as other factors that can cause a bank crash. So right now in this situation, it doesn't seem like really either is the case. This collapse in and of itself probably isn't going to cause a recession. Similarly, we're not necessarily in a recession right now. So that's probably not what has caused SVB to collapse in the first place.
Okay, so like you just mentioned, we're not in a recession right now, but could we possibly see one in the future, maybe coming up on this year because of this crash, or is this something that people really don't have to worry about at the moment?
Yeah, so I would say that certainly when a bank collapses, it is something to at least keep in mind. It's not something you have to panic about, and frankly, most people watching this probably aren't going to be directly affected by it. That said, I would say that there is a pretty good chance that we do enter into a recession this year, but it probably won't be as a result of SVB's collapse. It'll be instead because of other things weakening in the economy as a result of higher interest rates. Maybe the unemployment rate will increase, more people will be laid off, will enter into a recession. So, I also want to reiterate, while there is a pretty good chance that we will enter into a recession, we were just talking about the Great Recession, and I want to make it clear that an upcoming recession probably isn't going to be that bad. Right now where we're sitting, it seems like an upcoming recession will likely be more mild than not. That doesn't mean it's going to be fun. That doesn't mean it's going to be, a great time for everyone involved. Nonetheless, we're a far cry away from the massive global financial meltdown that we saw in 2007, 2008. So, it's something to keep in mind when a bank collapses or when you hear talk about a recession. It's something to keep in mind. But in this case, it's probably not something that you need to absolutely lose your mind over.
Thank you for mentioning that because I feel like in the past few months, we've been hearing a lot about recession and coming out of COVID, everybody was scared in a way that it's like, wow, we're going to be in this recession. And, they were thinking back in history's past and what was that like? So thank you for mentioning that and, almost easing people's nerves in a way. And you had mentioned also that not everybody is going to be affected. But for our viewers, can you, from your perspective, can you tell us if this crash could potentially happen to other banks? And, in that case, like, is there anything they can do?
Yeah, so there is always a risk that a bank can fail. It is
Mhm.
rare. And like we've seen in this instance, when it does happen, the government tends to move very, very quickly to ensure that the damage is minimized. So, it's not necessarily something where you need to think, oh no, my bank is going to collapse. I should withdraw all my money and put it in my mattress. That would actually be a very bad idea, generally speaking. That said, if you are worried about a potential economic downturn, even if the likelihood of your bank collapsing isn't particularly high, there are some things you can do. For example, try to boost your savings as much as you can. Try to pay down your other debts so you don't have to worry about them if, in a worst case scenario, for example, you lose your job or something like that. I know that is certainly easier said than done, especially in today's economy with inflation as persistent as it is. Nonetheless, the more proactive you are right now in the present towards getting your finances in shape, generally the easier it will be for you to weather a potential economic storm that may or may not be on the horizon.
Thank you for mentioning that. And now ABC reports the Federal Reserve was actually aware of the risks to Silicon Valley Bank more than a year before its collapse. So why did they fail to avoid this outcome?
Well, that's kind of the $210 billion question. The reality is that, I'm sure that the government, the regulators have a lot of reasons why they weren't maybe proactive. And to be fair, it can certainly be very difficult for the government to make a determination on whether or not they should step in. But ultimately, I do think that unfortunately, we kind of are in a situation right now where a lot of regulations, not just within the banking industry, but really within the broader economy, are maybe a little bit more lax than they should be. And I think that this is a really good example of what can happen when the government isn't proactive enough, when the government isn't there doing enough to ensure that banks and other types of major institutions are well regulated, that they're not taking risky bets, and that they're really behaving in a way that has their consumers' best interests in mind. So, I think, I don't know if we'll necessarily ever know for sure why or get a good answer as to why the Fed or other regulators didn't step in with SVB, even if they were aware of the risks. Nonetheless, they did eventually step in. It seems like they are going to make everyone whole, which is good. But I do think that this does unfortunately speak to a broader issue regarding how businesses are regulated within the United States.
Okay. And so there were also risks cited in 2019. Does this mean that the pandemic had little to no effect on this crash?
So I would say that if anything, the pandemic probably prolonged the bank's lifespan. So it's kind of confusing, especially when you hear about how crazy everything was in the pandemic. But one of the crazy things was that in a lot of instances, banks actually ended up with more money, especially SVB, which was home to a lot of tech industry people who were depositing their money, a lot of startup businesses who were depositing their money there. They did very well during the start of the pandemic, through the height of the pandemic. And so as a result, SVB may have actually had more cash on hand, may have actually been in a better financial situation. Instead, what likely caused this was more immediate economic events, namely the Federal Reserve choosing to raise interest rates as much as it has. That was probably what was much more directly to blame for SVB, even if, say, going back to 2019, SVB was already showing signs of weakness or signs that they could potentially have problems in the future.
Absolutely. And lastly, how does this crash affect what we're currently seeing with inflation?
So this crash probably isn't going to have a huge impact on inflation. Like I mentioned earlier, inflation has been persistent. It's certainly not as low as we would all like it to be. I probably don't need to say that because we all realize that every time we go grocery shopping. But the truth is that even though inflation is far from ideal right now, it does seem to be slowly and surely getting better. That's why, for example, the Federal Reserve is so dedicated to raising interest rates, even though that kind of hurts a little bit. The long-term effect will hopefully be a reduction in inflation. So while I don't think that SVB in and of itself is going to have a major impact on inflation one way or another, I do think it is positive and nice to point out that it does seem like inflation is slowly getting better, and hopefully by the end of this year, it'll be even better than it is now. And maybe by the time 2024, 2025 either come to an end or roll around, we will be at a situation where inflation is probably back down to much more manageable, quote unquote, normal levels. So, hopefully that'll be something to look forward to, if nothing else.
Absolutely. It's funny as you were saying that. I was like, well, we have something to look forward to, a little light at the end of the tunnel. But Jacob, I want to thank you so much for taking the time out to speak with us. Your points were great. And thank you so much for speaking with us today.
Great. Thank you for having me.
Don't go away. We'll be right back with more Open after this.